Hello, my name is Wayne Lippman. I'm a CPA in Northern California. I've been practicing individual tax planning and corporate and business tax planning for the last 35 years. I was formerly a partner at the firm of Price Waterhouse in San Francisco. I currently have a smaller firm in Walnut Creek, California. Today's discussion will be taking money out of an S-corporation. The three ways of taking money from an S-corporation would be: one, through wages or bonuses; number two, through distributions; or three, via loans. The first area of taking money from an S-corporation would be wages or bonuses. In terms of wages, it would be payroll taxes would be required to be paid both by the S-Corp as the employer, Social Security tax, and also the employee share of Social Security tax. The wages should be reasonable. The IRS typically says that S-corporations that pay very little or no wages is unreasonable, and they allocate part of the profits of the S-corporation as wages. So it's highly recommended that S-corporations pay wages to a reasonable amount. In my experience, it's discussed a lot by practitioners and in academics, but you don't see a lot of audits relating to this issue. The second area, besides wages, is to make distributions from the S-corporations. A distribution from an S-corporation is typically tax-free as long as the distribution doesn't exceed the individual or shareholder's basis in the S-corporation. If the distribution exceeds the shareholder's basis in the S-corporation, it would be taxed to the individual as long-term capital gain. If it's not, does not exceed the basis, which is typically the answer, it's a tax-free distribution. And the reason for that is the profits of the S-Corp is already taxed to the individual, so the distribution is just a distribution of the income that was already taxed. So typically a distribution of income from an S-corporation to the shareholder is not taxed again. A third way to distribute money from an S-corporation would be through a loan, and it would be suggested that if a loan is made from the S-corporation to the shareholder, that a promissory note is completed and a interest rate that could be the AFR or the minimum interest rate charged with tables that the IRS establishes, interest rates should be charged on a loan. That concludes my discussion about S-corporation distributions. If further information is requested, you can contact me through my website, LippmanCPAs.com. That's L-I-P-P as in Paul, M-A-N, CPAS.com. Thank you and have a great day.